For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Just a short review of the oil trade from this morning. Just going back to the beginning of the week. Again, just looking at how the week closed. We had a down close week. And on day one, we broke Friday's high. Day one put in a low of the week and a higher high. Now coming back to the previous week's low on the Thursday, that formed our day one. Day two is Friday because we had day one longs in the market. That's day two. Day three was day three longs at the beginning of the week, day one, expanding the range. And on day two, we had higher highs. Breakout traders again triggered at the high of the day, heading into the US 12 candle window on Tuesday. And on Wednesday, we had day three, Wednesday, high of the week, and a day one, day two, day three for the current week at major round numbers, $90 per barrel. And that gave us our 3 days of rise, day one, day two, day three. Obviously, we had a peak formation low the previous Thursday. And if we come back and just look at numbers, we have come up from the quarter level in level one for 3 levels of rise. That's $7.50. We broke down yesterday inside. Again, the low of the day was broken in the London session. Broke the low and continued to break down into the US 12 candle window, taking out the low of the week and trading down $5, 500 pips. Taking out the low of the week, and that also gave us our first red day. Now, for those of you who have been listening and paying attention, I talk about looking for 3 peaks on a first red day. So 3 peaks. Again, paying attention to where we break out. Previous day's lows can now become a resistance area, but on a first red day, I look for 3 peaks or 3 levels of rise to continue our short trade down. And obviously, the London session trades up to the lower peak formation high. That's our second push up from the Asian high, which is inside. And then we trigger the previous day's low. So the market comes down. This triggers breakout traders. So think about what they've done here. They've come down. They've excellent high of the day trade in the London session. They've come down and triggered the low of the week and the low of the day. So again, breakout traders are in the market. So we've got shorts, other time frame traders in the market, and they come back up during the gap time to the high of day. An excellent question from a trader was that I took the short trade on the engulfment of the large candle in the first 15 minutes of that US 12 candle window at the high of the day, and he mentioned that there's no break in structure and that I was the first mouse. Now, if we come back and look at our chart again, first red day, I want to sell the high of the day. This is now a broken down market. I do not need a break of structure for a trend trade. The trend is now down. We've taken out the low of the week. That's our first red day. I want to sell the high of the day. If we were in an uptrend and I was looking to sell the high of the day, I would be selling into the trend. This is an existing downtrend, and we have 3 levels of rise, a reset. So for traders who are asking about a reset, this is an intraday reset. We have 3 levels of rise, and it pulls back to 50 and continues for another 3 levels of rise, makes a high of the day prior to our US 12 candle window. The first 15 minutes breaks the high, pulls back, expands the range, continues to go back to the high, and engulfs, we'll zoom in on this, the 3 little bars, 1, 2, 3 to the high engulfment. That to me, for this current time of the day in first red day trade, all of this volume being dragged up higher is low-hanging fruit for a vertical move down. As you've seen me draw that line before, when we see the higher level longs getting caught chasing the move, looking for that explosive measured move, that's a dead giveaway for a vertical move straight down. Now my target was 75 pips from my entry. I took multiple entries until it started to break through the break of that line. And the reason being is that my thesis was this had room to go at least to 50, but I was targeting that quarter level because of where that 3 levels of rise began. I thought they would put 25 in, which eventually they did. It's a 1 bar stop. They've gone 25 pips above the 00 box. They've taken out that blue tracer from the previous day's breakout traders. So again, if we come back and look at this trade, understanding the psychology, we've got breakout traders in the market. That gap, they've got traders shorting this market down low underneath, creating that space, hitting stops on breakout traders. The thesis is that nobody gets a free lunch. These higher level longs are easy cannon fodder for a vertical move. Timing wise, this market takes 45 minutes to an hour to take out these higher level longs. The second hour begins, counter trend. There is our break in structure. They come vertically back into the low in that first 15 minutes of the second hour. The second 15 minutes explodes for a vertical move. Now, another excellent question from the traders: why didn't I take the long trade back up? Again, I'd like to focus on taking one great trade, and most traders will end up continuing to trade, and I talk about taking the trade and locking in the money and getting off the screen. This is like 1 hour of work, 67 pips. As I followed this market down, and as we got closer to the target, I followed it tighter on top of the pins. The market continued to break down. I moved it down into the 50 area and was stopped out. Although it continued and came back down vertically, another question was, why didn't I just give it more space? Just a decision I made in live time to continue to tighten that up. Oil can explode, as we've just seen even on the chart today. And again, as I get closer and I'm locking in 50 plus, 60 plus, 67, 75, what's the difference? I just had 1 hour trade from the high of the day, first red day. I was reluctant to think it would go all the way down, which is why I tightened it up. We have news coming up in the next few minutes. University of Michigan, or prelim, I believe it is. Consumer sentiment, doesn't matter. So that's my rationale and my psychology behind taking this trade. We are down low. We're trading into last week's bottom formation that was made on the Thursday. So again, it is possible that this $83 level, $84 level, somewhere in there, could be forming some support. We had the breakout at $84.50, and we're trading just above $85. So this market may find some support in that area. No idea. It doesn't matter to me. We could still end up continuing this move down. First red day yesterday, 3 peaks, a high of the day. New York open back to the high. I mean, I'm not interested in trying to trade every swing and move in the market. I'm looking for one quality trade setup each day, 1 hour a day, and again, sizing into these rinse and repeat type of setups. My rationale is not how many pips can I get. My rationale is which trades are repeatable that I can scale into, make my money, and get off the screen. I don't want to continue trading. Most traders end up giving their money back because they continue to try and catch pips and get as many pips as they can. I want to make as much money as I can, get off the screen, and get on with my day. Hopefully that makes sense. With a trend trade, I don't look for a break in structure. As we see here, the reversal on a first red day, we have our break in structure, a return to the low of the session. First hour makes a high and a low. They retest the low. Second hour, explode vertically to the high of the day, start to break down into the open of the NYMEX and equity markets for a 75 pip continuation move back into traders who were short. So could I keep trading? Absolutely. Do I want to try and do that? Not necessarily, because the more you trade, the more likely you can undo a lot of the good work that you do. So end the week strong, traders. Have a great day. Enjoy your weekend, and may the markets go with you.